Order of depreciation. We've got different types of depreciation, and there is an order to it. So as we saw, first off, you want to try to get that section 179, but if you can't get the full amount, then you go back to regular MACRS. So we see order of depreciation, what is the priority level? You start with 179, and let's say you're a massive business, you can't really deal with 179. You'd probably just skip that step overall and go to the next step. Now, we'll talk about bonus depreciation in a second when we get to it. When a taxpayer acquires new personal property, tangible assets, because you got to depreciate those, for use in their business, they have the opportunity to claim depreciation deductions, as we've seen. So this is pretty much it. These are the full amounts. We'll see an example here as well. The depreciation deductions are applied in a specific order. We've got section 179 expensing, bonus depreciation, and then MACRS, which is just everything else, the rest, the normal depreciation. Now, just a recap here, since we kind of covered that a lot. Under section 179 of the IRC, a taxpayer can elect to expense the cost of qualifying property up to a specific limit, which is adjusted for inflation each year. The property must be used in an active trade or business, and the deduction is subject to an investment limit and a taxable income limit. For example, if a taxpayer purchases a piece of equipment for $60,000, they could potentially expense that entire cost up to our limits, and all those limits that do change year to year will be included for you to memorize. Bonus depreciation. After applying a 179 expensing, taxpayers can claim bonus depreciation on the remaining depreciable basis of qualifying property. Now, this current bonus depreciation percentage is on 100% for qualified property acquired and placed in service after September 27th, 2017, and before January 1st, 2023. This is going to change year to year a lot, and normally we would not have something like this in a slide, but this is something that is changing significantly. We had Tax Cuts and Jobs Act. We have all these wonderful tax changes, so this is just the treatment for it. Now, I'd say knowing Section 179 and general MACRS is more important than knowing bonus, especially as the hesitation to test things that change frequently is a factor to keep in mind with the AICPA. Bonus depreciation applies to new or used personal property with a recovery period of 20 years or less. So, for example, if a taxpayer purchases a $20,000 piece of equipment and already claimed $15,000 under Section 179, they can claim the remaining $5,000 as a 100% bonus depreciation. And then lastly, getting over to MACRS, finally, taxpayers apply MACRS depreciation to the remaining depreciable basis of the property after considering 179 and bonus. Personal property is usually depreciated under MACRS using either the half-year or mid-quarter convention, depending on the timing of when the assets are placed into service. For example, if the taxpayer purchases a $50,000 vehicle and claims $20,000 under 179 and $20,000 as bonus depreciation, they would then only have $10,000 left of a depreciable basis for that asset. Example here, purchase in the business a new piece of machinery for $100,000, assuming the taxpayer can fully utilize the 179 deduction and bonus depreciation. The order of applying the depreciation would be as follows. Let's say the limit in this case is $50,000. I know I'm jumping around everywhere. We've got high limits, low limits, but that limit will be there for you to memorize. So we take $50,000 in 179, then bonus depreciation, 100% of the remaining basis, which is going to be $50,000. There's nothing left for MACRS to depreciate because we used it all up in 179 and bonus depreciation. So in this case, either way, you can deduct the entire $100,000, but it will be important to distinguish between the types of depreciation and cost recovery. Hey, that's the title of the lesson. As we are going through, as it'll say, just like understanding the difference between, say, dividend income and interest income, it's also important to understand the difference between bonus depreciation, MACRS, etc. Depletion. I'm going to do this super quick. Not really something to be concerned with, but it's just, this is being removed from the exam completely. But just for your general knowledge, depletion is essentially the same thing as depreciation. However, it's for natural resources. So if I've got a gold mine or if I've got an oil field, something like that, we deal with depletion. That's the word for it. Instead of depreciation, we're depleting it, depleting those resources. It's a tax deduction method used to account for the decline in the value of natural resources as they are extracted, such as minerals, timber, oil, and gas. We allocate a portion of the resources cost to each unit extracted, thereby reducing your taxable income, kind of like cost of goods sold. There are two methods of depletion for tax purposes, cost depletion and percentage depletion. Again, this is being removed from the exam. It's also just kind of more as an FYI, if you're interested. There are some things here, kind of tying it all together, because just mentions of depletion may come up. So you may, even though they're removing something from the exam, doesn't mean they're not going to mention just in passing. Not that you need to know it, but the more words you understand, the more you'll understand the question. It's kind of like reading a sentence in another language. The more words you understand, the less kind of freaked out you get because you understand more of what's being mentioned. Cost depletion is based on the cost of the resource and the number of units recoverable, while percentage depletion is based on a fixed percentage of the gross income from resource extraction, with the percentage determined by the type of mineral being extracted. All right, nothing too wild. Just want to move past that. I do include certain things like that if they kind of give valuable insight into how some other things are treated, because you don't want to get tripped up. Maybe on the exam they mention that there's a long-term asset, and depletion is maybe one of the incorrect answer choices. Well, now you know not to choose that. Even though, again, they do say they're removing it from the exam, you never know. All right, here is an example of cost depletion. I'm actually not even going to go over this. Just let this sit here. If you want to pause and just look through it for your own knowledge, feel free. But again, I am not going to say this is going to be important for the exam. Percentage depletion, again, here, if you want to take a pause for the video and just look through how it works. Again, not going to expect you to see this on the exam ever. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.